I'm Jim Juback, and welcome to this week's Trend of the Week video. This week's trend is China weaker than expected. I've written about and videoed about China's economy being weak, so that's not the news. It's the then expected part that I'd like to draw your attention to. What we got on Wednesday was numbers for May showing that Chinese exports were down 7.5% year over year. That's May to 2023 to May 2022. That's a huge drop. Economists had expected weaker, but they were expecting a drop of 0.4%. So we got a decline of 7.5. We wound up with 0.4. And it's clear that the Chinese economy has the recovery in the Chinese economy that we got after the COVID shutdowns has moderated at least. Now, the reason I want to emphasize than expected is because in the last few days, we've had the semi-annual projections from both the World Bank and the OECD, the Organization for Economic Cooperation and Development, doing forecasts for the year ahead. And the forecasts haven't been particularly bleak. They both showed the global economy slowing, although the OECD economy sees it. It says it's better than it looked in January. But the key thing about both of these is that these projections were predicated on really pretty solid growth from China. The World Bank, for example, said, hey, about 4.5% growth. If we don't get that, these projections, these expectations about the global economy coming in at 2%, 1.2%, whatever for 2023, and about that for 2024, are going to wind up being high. So what you've got, in essence, is a global economy which, feature of our time, is leveraged to Chinese economic growth. If we don't get the growth, we've got a kind of setup that will let that then feed through in a negative way across the globe into projections. And some of the projections, the World Bank got really, really fist-poundingly negative on problems in the developing world. Low-income countries have run up a lot of debt. Rising interest rates are really crushing them. So they basically waved the flag and said, hey, we got a problem here. We're looking at these countries being unable to repay their debt and or feed their people, because food prices are still going up. So this is something to worry about. If the global economy slows, I think we've got a situation where it's not a run on the banks. It's sort of like a run on low-income countries that could develop and then spread to the rest of the global economy. Something to watch for and not look forward to, and not necessarily sleep well at night, but basically, hey, the reason you watch for things that might go wrong is so that you can think about, what do I do if they do, and if they do go wrong, being in dollar and dollar denominated investments is going to look very, very good. And if you remember, yesterday I talked about buying 2-year treasuries. That would be a way to hedge against this problem. So thanks for watching. If you like this video, please give it a thumbs up. Subscribe to my YouTube channel. That way you get notification of when we're doing the next one. We're doing about 3 a week, but not always on the same day. You can subscribe to my free site. That's jubackpicks.com. You feel a link to that down below. 3 portfolios. You can subscribe to my paid site. That's JubackAM. Link to that down below. Also, this week I've put up a Jim's Extra. It says these are 10 stocks that I would recommend as a core portfolio. Core portfolio for a beginning investor. Core portfolio for a continuing experienced investor who probably already has a core portfolio, but it's not a bad idea to run your thinking up against mine. You might be right, I may be wrong, but the whole point is to test your thinking all the time in a market. So that'll go up on the paid site as the free site. If you go to the free site, it'll be behind a very thin little firewall that requires you to sign in for my daily alerts, but it's still all free. You're just giving us your email so we can continue to send you stuff about offers we have, new products, new editorial, whatever. So please subscribe to one or the other of my services. So thanks very much for watching. Bye-bye.